Welcome to Trading Lounge and the Elliott Wave report for the DAX and the FTSE, the MIB and the AEX. And with the DAX here, typical of a wave 4, wave 4s tend to be complicated, and that's certainly what's occurring here through this particular pattern. So I have a bullish pattern and I have this triangle pattern. We did also have this pattern as from this top here as wave 1 and wave 2 here, and down for wave 3 and up for wave 4, and then down for wave 5 to make wave C of 4 here. That's still possible, but would have to break lower to do that, and it's just that as a wave 4 it's pulled up quite high here and also interrupted the top of wave 1 here, so we could rule out that count, but it's still sort of hovering in the background a little bit there, but probably not the case. So this particular triangle pattern here that we're looking at from wave C here, we're looking, well, a triangle is 5 waves counted as A, B, C, D and E, and within each leg we're looking for 3 waves. So 3 waves here, and an A and a B and a C wave here for D, and it's also diminishing as well, so a little bit like a sound wave really, as it diminishes on that sort of harmonic sort of value. So in this case here we can go in and have a look at this here. So we would look at the A wave being completed now, and the B wave here is only halfway through, so a move down, a move up, and then a move down, and then the C wave coming in here in 5 waves, and then an A and a B and a C again here. So rather a complicated scenario. So it's not really fantastic trading environment in terms of catching a trend as such. So we've also got the bullish count as well. So I'm going to go into the bullish count and then we'll dive in and have a look at the triangle in a bit more detail. So for the bullish count here, we're looking at this wave 4 being completed over here, and wave 1 to the upside, an A and a B and a C here for wave 2. So in this instance here we would look at this move up through here, not so much as wave 1 yet, but one more move up here for wave 1 to make one more high here than the ABC correction here. So first of all, with this count here, what we would really want to catch would be this wave 3 moving in over here. So I'm not going to worry too much about this for the time being. We did look at this last time as a wave 4 to pull back to the wave 4 of 1 lesser degree, and then wave 5 up, and that's what's occurring here at the moment with this. But let's dive back into this triangle pattern here. I'll just go to the 4-hour chart here. So with this move here, wave C here, we're looking for an A wave here, B wave here, and an A, B, C for the D wave here. This move here will be in 5 waves moving to the upside, and there should be some sort of relationship between this distance and this distance here. So this does appear to be in 5 waves moving down through here. So if that's the case, then we'll move back up to where this B wave is, that little box there in the, just open that up a little bit higher here so we can see it. So wave B here moving into this space here and then moving down. So that's the 50% retracement level and the 61.8% at the top of the rectangle box there. So if the other count that we had for the bullish count would see this move up and make one more high here, and then that would make this wave 1 as wave 1 and 2, and wave 3 here and wave 4 here, pulling back to this wave 4 of 1 lesser degree, and then 5 waves up here. And if that's the case, then we'll certainly look for the ABC correction here, and then we'll be going further up from that point. But I won't go there just yet. Let's just handle the tricky bits here for the time being. So yeah, this is kind of what we're looking at. So let's just see if Friday and Monday give us this this bearish day here. On the 2-hour chart, we'll get a bit more detail on that. That was the that's the the bullish count that I was talking about before. So with wave 4 pulling back here and wave 5 moving up, so we won't go there just yet. I just want to go to the 1 hour chart here, and the 1 hour chart has this here as down for wave A and up for wave B here. So yeah, this needs to complete up here a little bit into the top of this box here. So the 12,550 area here. Also too, if this powers through here, then what you'd normally look for is that, I mean, it's nice to know, nice to be right, but it's also nice to know where you're wrong and what you're going to do about it. So the 12,550 here, if that became the tested support, then look to trade long there if we miss it. So it would react from here, by the way, and then move up through here and then move back here. So then that would give you your signal to be long at that point there. So that's the way that you would handle that. And also too, the reason for that is because you'll be getting a tested support on top of 61.8%. So in that case there, having that reference point, that first high above the 12,550 would give you that access to move up from that point. If we fail from here and we move down, then you can short the retested resistance here. So what would occur here would be do it from here, would be a move back down from here. There would be a bounce back off the 500 here, 12,500. Then it would move through here, and then it would kick back here, and then you would use that trigger there, that on that retest to trade lower into this into this space down through here. And obviously there'll be support here as well, and a movement and then down. So we'd be looking for 5 waves from B to C here if it failed from here, and the trade would be on the retest of 500 to go to the downside. So we're really looking at using the trading levels and the classic trading levels pattern at the levels as the setups, because we need to be a little bit careful about how we move through this particular triangle pattern with all of this as well. So yeah, very tricky little market at the moment. So I'm just doing my best to navigate us through it, but there's certainly no sort of larger trends. There'll just be short, sort of fast moves, and a lot of consolidations through this as well. So yeah, just try and sort of step back from it somewhat. The AEX coming in here for the daily chart. So it looks a little bit complicated here, and it possibly is, you know, in line with the DAX of what we just discussed as wave C coming down here, and then wave D here, and then wave E over here for wave 4, and then moving up. But the bullish count for this too is wave 1 moving up and wave 2 coming back, and then moving up higher through here. So it does make a reasonable case of having this as wave 1 up here as an A and a B and a C here for this, and then up for wave 1 and back for wave 2 here. So yeah, look, it's pretty much exactly the same as the DAX. We'll just go in here and have a look. I'm not sure what I've done here, but right. So on the bullish note, the bullish note would be that, I mean, this is already pulled back to this level here, and I do have from this low here, I have 5 waves of 1 and 2 and 3 and 4 and 5 moving up here. So it can be wave 1 or the A wave here, and we have moved back in here. I can't figure out if this is 5 waves or 3 waves coming through here. It's not clear enough for me to call. So this could very much do what the DAX is doing as well, just move a little bit higher here, and then fold back down here for a larger correction. I'll just see what I've done on the hourly chart here. Yeah, the same thing here as well. So yeah, this move down here, I have pulled it apart. I'm sorry, I just can't figure it out. I mean, it looks impulsive, but it can also be corrective, and it has pulled back. I mean, here's our little 5 waves off that low here. I mean, They're also like it's a bit of a dodgy 5-wave move as well in terms of 1 and 2 and 3, ABC for 4, and then all the way up for 5. But it does count as 5. It could count down as an A and a B and a C, but it also can count down as 5 waves. We're at the 61.8% mark here. So the move up through here can also be counted corrective or impulsive as well, in terms of 1 or A and B or 2, and then 3 and 4 and 5. I can see that this has got a little bit more to go up here. Obviously it doesn't have to stop at this mark here, but if it's going to move higher, then we need to gravitate to the closest largest number, which is obviously the 60 here. So if it's going to, if it moves up that high there, normally it's just going to continue to move up from that point. And if that's the case, then by all means, move up from that point there. Yeah, I don't really know what else to say. I've pulled it apart. I just, because the DAX is not clear, this is not going to be clear either. On the DAX, by the by, we have, if we wanted to copy that and move that over here, then the B wave here is not complete, if that's going to be the case here. But it's already pulled back to its 61.8% mark. So, and if it does go higher than the 61.8% mark, normally what happens, it won't come all the way down, or just come part of the way down here, or back to this level here, before moving up here again. So look, I'm sorry, I just don't have a clear pathway for this at the moment. A bit of a rock and a hard place. The English FTSE here as well. This is also messy, and I don't have a count on this particular chart here, but what I wanted to point out here is something to do with the trading levels, and it will be helpful. It just takes time. So between 800 and 500, the 650 is the halfway mark, and this number here is more important to me than 600 and 700. This is the balance point of anything that's happening in this suburb, so to speak. The point here is that we've had this market here as a support, where it's bounced off and come back and then failed to hold here and migrated towards resistance and dropped down. And then from here it's doing the same thing as well. It's got this as resistance, and then back up here, but it didn't come down on support here either, and it hasn't checked it as resistance here, so it's still basically freewheeling through all of this here. So what we would need to see here is we want to see this level as support. So even if this market moved up here, then it comes back, it's got to sit on here before it moves up. So that would be the trigger at that point. And if it was going to become bearish through here, then it would have to come under here and lock and check back in here, and then that would give us our thing here. So because the DAX and the Stoxx 50 and the DAX and the AEX and the others are not very clear on their pattern, we have to wait for a setup here. And this particular level here as support or resistance has got to come into play. I can see this has got to move higher here, and it could probably keep on going, and we do have there is a small retest in here. So technically, if you took that long trade from that high here, you'd be doing the right things with the stop under here, and then moving the stop up under this current low here to get a bit of base. But you're going to meet where all those highs and lows are through, see those open and closes, see how they gravitate towards one place there. That's, well, it's obviously at the 700 there, or close enough to it. That's obviously where this is going to react from here. But if this moves up through here as well, then you just need to look for support on the 700, which will take a while as well here. So the same thing goes to apply here. We need that first high above the level here. So there's not a lot I can do on this particular chart here. So this is the 4-hour chart. So the 7650 here was my sort of key place. We talked about this market moving down to this space, into this space here and then moving up. And if it moved up here in 3 waves, well, then we could have like looked to the short trade here. It still may be the case if it drops from this area through here, it's got to come back and retest it, and we can look to short it from that point. Okay, so we need to short it, we need to be under this level here, and to be long here now, I've got that sitting up, this obviously this low here and this high here are the important things. We can move this into getting a better short trade under here if that's going to be the case, because it does look, you know, we can from the top here, we can count this down as 1 and 2 here and 3 here, and A and a B and a C for 4 and 5 here. So we can count 5 waves down here, by the way, you know, and then this makes an A and a B and a C wave up into the 50-60% area through here. I suppose we could count this as a bullish move going up here as wave 1 here and back for wave 2, up for wave 1, back for wave 2, and then up for wave 1, and would come back for wave 2 again, and then we could get in on that side. But I have to say this, you know, this 5 waves here would, after an ABC, would need to see another 5 waves down. So I'm very reluctant to turn bullish unless we get the right setup. So the right setup in this case would be support on 7,700 as a tested support, or we're going to be shorting under the 7,650. So we just need to have a bit of patience. We can't get a lead off the DAX because we've got 2 counts there as well. So that's about the best I can do on those. The MIB is slightly different. With the MIB here, I can count this as a wave 3 over here and an A wave here and a B wave over here, and then 5 waves down here in terms of 1 and 2 and 3 and 4 and 5 here. So we can actually have a low in here, and this can be bullish. The only thing about this particular low here, if I can go to the 4-hour chart here, because it's possible from this wave 4 here down to the wave 5 here that we don't have that in here yet. That can be, if I copy that and put that over here, this can just be wave 1 here, wave 2 here, wave 3, 4 and 5 for this particular structure to finish here. So I've got this problem here. On the 4-hour chart here, we can have a closer look at it. So I mean, it does, you know, it does count quite nicely as wave 1 and 2, and then the whole 3rd wave here and the 4th wave here and the 5th wave here. It counts quite nicely as that. So technically we can put this just here as wave 1 here and wave 2 here, and then look at this moving up for wave 3 here. So we need a setup for that, and we'll look at that. So I mean, that's quite possible. There's also this down here as wave 1 here and wave 2 here, and then having this moved over here as such over here with wave, and this one over here as wave 3 coming down, wave 4 here, and wave 5 down to the 20,000 here. That also makes sense as well, but I just don't have the answer for that at the moment. So we just really need to get into strategy here to play it off as such. So yeah, so in a nutshell, we're working with the markets vibrating across this number here, okay, the 22,000. So that's the number that we have to use here. So in this instance here, we wouldn't want to go long under this particular number here, okay, because it's going to hit resistance and supply here. So the risk reward and the stress is just not worth it. So, but this is the number that we're working with. So long above this point here, we can also bring this down to here as well, but these 2 levels here are where we need to either be long or short. So with this move down through here as well, I couldn't figure it out on the DAX or the FTSE and so on, so it doesn't give us a clear 5 waves or 3 waves, because that would normally help. So I'll just go to the hourly chart here. So with all that in mind here, we've got this move, this move down through here. It does count quite nicely as 5 waves as well, but it's not going to help us at this instance. So what we can do is that if we're going the move up here, the 50-60% retracement levels just before the 22,000. So yes, it will move up a little bit higher, but that's where it's going to stall and fail from. If it's going to stall and fail, then our first stop is main outside short is to here. But then we can bring this up under this particular level here now, because I know from this little move here up to here is 5 waves. So if that's breached under this level here, then we can be short from that point. Okay. If it's going to be a long trade, then yes, it will stall at this point here anyway, and the 22,000 from that point. But eventually, it would find its way above the 22,000 and make the first high above the level. So that would come over to wherever that high is here, and then we can bring that down. Copy that level, bring it down to here, and then down to here. Most times, when we get the first high above the level, and it may not go that high either, by the way, but then wherever it is, it will come down and bounce off that and go through, bounce off the 22 and go back up and hit supply again up here and then drop. So in about 70% of the cases, or maybe even more, that the market will drop through the 22,000 and then find its way back up. But there are cases, 10-15% of the time, where it won't go through there and just come straight back up. So those two highs here will be critical to start building into the long trade here as well on that point there. So we've just got to be patient to see how this pans out. And also the US markets are also in a bit of a tricky situation as well. So we need to see if they're going to turn bearish or continue on their bullish path as well. So it's going to take a few more sessions to sort all this out here to get a trade out of this that's going to be worthwhile, because that's what we're looking for. We're looking for a trend, and we just need to be a little bit patient here with that. It's kind of interesting what I was talking about here with this coming back below the level here is very much like, because this will be, if I remove this here, this move up here, it will come up to here into the 61 point and then struggle from here and have some type of, normally a 3-wave correction within this space. But if it's going to move up, then it will move up into here and create that first high above the level here and then drop. And this is exactly what it's done over here, same thing. So it moves up, reacts from here in that 3 wave, and then it has 5 waves up here and then drops again. So we'll be seeing this in a bullish market. We will see this here, but in a smaller version of that pattern sitting over here. Okay, but what we really want at the end of the day, we want to see this market sitting on that number. This is the closest, largest number from here. Other important levels from here would be, well, the 500s part of the next thing, but so we can leave it there, the 800, and then on the upside here we've got 100, 200 and 300, and then we would have 500 again up here. So one of the things in turning into a bullish market is the number 3 here. So if number 3 here becomes a tested support, then what that means is it means that all the orders that come into the market are separating from this closest, largest number here. This is the number 3 is what separates the market being held by this number. Consider numbers like magnets, because people think in even numbers and whole numbers and lastly odd numbers. So this number 3 here, getting support on this level here, it's really good to know this, and the support would be a tested support like we're talking about here. If that's supported, then you know that the market is separating from the 22,000 here. And what people do, they start thinking after the number 3 here, yeah, I know 4 is natural, but what they actually start thinking about is the number 5. And a market will run very quickly between the numbers 3 and 5 in both directions, and the same between 5 and 8, which would be the next level up here as well. So markets run through the quickest, that they run from 5 to 8 and 8 to 5 in both directions the quickest. But 5 is always a game stopper because 5 is the second strongest number. And then markets tend to move very slowly through these numbers 1, 2, and 3. These are choppy here. That's where you get sort of bouncy. Through a bull market, it's nice to build in on these. You can build in on the 22, get, say, a position on the 22, get another position on the 100 when it becomes support, and then another position on the number 2 here when that becomes support, and then you can get another position here on number 3, and you can 90% of the time or 95% of the time you can expect number 5 here to have a correction, a reaction. Normally it comes down to the 4 and then builds back up, but it can come back to the 3 and then build up as well. So the number 5 gives, knowing that it's going to be a correction there, gives you the opportunity to think it out a little bit. You can take all the profit, part profit, or no profit at all if you're a longer term trader, because if we get support on the 22, we'll be heading to the 23 at that point. And so these levels here, which are the Fibonacci numbers, 1, 2, 3, 5, and 8 as price ratio, they give you the opportunity to build in. And the more that you understand each of these numbers, 1, understanding that, understanding 2, and understanding 3 and 5, and so on. There's a bit more. We've got group 2 in here as well, which is the 7, in this case 72 here and 65 here. They will also play their part as well. But the more you get to understand numbers as personalities and characters, then the more stronger your relationship and understanding and better relationship you'll have with them as such. But while we're building into, group 2 here, for instance, would be 800 here, be 720 here, and 65 here. So this 72 here I always put in as an orange colored number. It's not turning orange, I don't know why. Maybe I need to move that. There it is, it's hidden behind another number, so I'll just remove that and then grab that and move that down here, 720, you can line that up. So really, when we're talking about the closest largest number here, this number here, then we also need to take in group 1 here and group 2. This is while this market's vibrating or having a correction across this number here, it's group 1 that will hold it down and group 2 that will support it. So it's only when group 2 become the retested resistance that we know that the market is going to leave the 22 and go to the downside. And the same with here, the number 3 to the upside. Once that becomes support, then we know that it's going to leave this number and head up to the next number. And it's going to be pulled by 5 because everybody will be thinking of 5. And this, what I'm talking about here in all this space here, this will be the same at 21,000, at 22,000, 23,000, and so on. So this is what understanding 22 here, you need to also understand these levels here. And also there's micro levels within these space, between this 100 points here, the same thing goes again. The 1, the 2, the 3, the 5, and the 8. They're all in here as well. So that's the fractal nature of Elliott Wave being associated with price. And when you associate it with price, you're also associating it with psychology of the market. When they say psychology of the market, I suppose there's many different ways to view that, but I look at it, the psychology in terms of the people, and the people place orders at a certain number, so it's the volume. So all those things tie in together. All right, sorry for yakking on too much, but just wanted to just touch base with that. All right, well, have a lovely weekend. Cheers.